Hi, everyone. Welcome once again to this session. Today, or last time we had this session, we talked about support and resistance, how support happens to be the floor where price bounces off at, and then resistance happens to be the ceiling where price bounces off from. Now, I also identify the fact that support and resistance are not necessarily lines, as you can see. They're more, although we draw lines, but they are more zones or levels. Why? Because we know that we are all traders in the market, where you can consider your support number or support line. Maybe some may not be somebody else's support line. So, but if we all look at it like we all have an agreement that price has this reaction around this area, if all traders have an agreement that price have this reaction around this area, then it means we can all trade together. We can all decide to buy up to this point and then get out, or we can decide to sell from this point. Yep. So, but if somebody else says that decides that their own support line is probably here, they can, while we are out of here, they can still at this point they can still hold their trade up onto that path, But the bottom line is we are all within the same zone, because we see that that is where price had a reaction in the past. So if I'm going to, this is the past, right? This is the past. If I decided my support line was this yellow one, and somebody else decided that their support line was this one here, right here. Hopefully it's showing. Yeah, this one right here. This pink line. Or somebody else decided it was the base of this blue rectangle, then it doesn't really matter because we would have all taken our profit. Now, if we all buying, it means that, you see the way a reaction happened here, that means someone left the market at that point because that is where they felt their own support was. You see how this reaction here means someone left the market because they felt that is where their own reaction, their own support was. Someone left here, that is where they felt their own support was. Again, someone had to hold their position up until this part, because that's what they felt their positions were. Now, if you look at this market, I think the market, because it had so much strong buyers, that's why you see it jump and break. We talked about the fact that when it goes beyond the particular resistance, it is called breaking. It's breaking that resistance. Now, one thing I want you to understand is that just because it broke a resistance doesn't mean it's going to keep going up. It may break and then maybe come back in to become support, and then probably beyond that point, that support line or support level, which is what we call sometimes as fake breakouts. Now look at this, like for example, it broke this support line. Yep, it broke it, but what did you see it do? We thought it was going to keep going down, but what did it do? It turned back up, started going back up. So this was considered a fake breakout. Yep, but these are things that you will see often in the market. Yep, you see this often in the market. This is another example. You think it's going to keep going up, it's going to come down because it's broken this level, but what did it do? It went back up. It broke back into trend and then kept going up. So today we want to identify, how do we trade support and resistance? How do we trade support and resistance? How do we enter a trade using support and resistance? Now we've seen and see the title that I gave here. One way you can do that, you can actually enter a trade when price bounces off a support or a resistance. If it bounces off a support and resistance, then you can wait and enter the trade at this point of the market. Entry. So you can enter at this point of the market. Yep. And then here will be your stop loss, because you must always use a stop loss. We'll identify what stop loss is. A stop loss is an angel. It is what keeps you from blowing your account, just in case the position you took goes against you. Now let's assume price comes down, it's coming down, then it touches our support. This is let me put that line there, that name there. This, by the way, is our support line. That is our support line that we've identified in the market. So price came to that point. Immediately it bounces off here. As it's going up, we don't enter. Some people, so although some people enter here, they buy at this point, but they run the risk of price breaking down, just like what we saw here, and then hitting their stop loss, because once it hits your stop loss means you've lost that trade. So it goes, once the price hits here and then starts going back up, you can now enter your trade to buy it. A typical example is what we see here. Price came down, it hit this place. Let me show you this one. It hit this place, this one. What did you see it do? It went up. So we can decide to buy it when it got to this point. And then if we bought it, we will take profit at the next level, next support or resistance lines, depending on where you're coming from. If you were selling, if you're trying to buy this market, when it bounces off here, you enter here. Maybe your entry is somewhere around here. You enter here. Yeah? Let me make this a bit bigger. I'll probably change the color. And we'll make it yellow. Oops, I thought that was gonna work. Let me see. Oh, okay, 12. Oh yeah, that's what I was looking for. So let's assume I entered here. Is yellow not a very good color to use? I don't think it is. I'm gonna try blue. I'm trying to make it even bigger. All right, let's try blue. Okay, I'll manage that. I'll work with that. So let's assume I entered here. Yeah. I can decide to put my stop. I would put my stop loss somewhere here. Why? Because that's like the lowest point of price. This is where price got to before bouncing up. So I believe it may not need to come down that low. So when it goes up, I can decide to take my profit somewhere around here, because that's another level of support or resistance. This is where I found reactions happening. So if I took my profit here, I would have made money. Let me see how much. Remember, this tool is used. It's called a crosshair. It's used for finding out the number of pips. So if I did this, if I entered here, this would have made me 100 and, let's just say 194 pips. If you look at the number in the middle, remember that is the full number is called points, but the first three number or the first two number is called maybe if it's a 4-digit number, the first three number is your pips. If it's a 2-digit number, the first number is your pip. If it's a 3-digit number, the first two number is your pip. Always leave out one number. Now this is, if I see this is 232 pips. Forget the last number. If I see this is 543 pips. That's the number in the middle. Forget the 7 there. If I do this is 28 pips. Forget the 0. If I do even this is 21 pips. Forget that one that you have on the right. So every number, the number in the middle, the first two number. This one is 4 numbers. The first 3 numbers is my pips. So if I took this trade and I decided to get out here, I will be making 194 pips. So if I have like a standard loss size, remember a standard loss size is $10. $10 times that's $1,940 dollars or pounds or whichever your currency is. If I had like a mini of 0.1, which is $1, that's $194. If I have like a micro, which is 0.01, that's a micro lot size, that's 19 pounds 40 cents. So that is where I would have gotten out of. So, but how you get out, entries and exits, all of that we will treat in subsequent classes here, because there are different strategies for trading the market. But today looking at support and resistance, support and resistance. So if you're trying to enter the price on a bounce, meaning that you have to let the price to sell up to that point, then when it starts bouncing, when it starts going up, you buy. You can take your profit on top. Then that would have been your trading. Now, on the opposite, let's assume price is going up. It's going up, right? And you want to sell. You see what happens when price bounces off this level. Let me put that line too. Let me draw it as a line chart first of all, so that you can understand what I mean. So price is going up. I've seen that price is going up. I know that my support is here, somewhere around here. I have a support line here. Sorry, resistance line, because price is going up. A ceiling. So when price gets to that point, I just noticed that what happened? Price just decided to start coming down. From there, I can now sell. This will be my entry now. Why? Because price has bounced off my resistance. Where will be my stop loss? You guessed it. My stop loss would be above here. Just like this, on the opposite of what you had here. The opposite of what you had there. So this will be my entry price. I will just enter at that point. So I will trade it down. Now, a typical example of what we are talking about is this. Price came down. It was going up, right? It was going up. But what did we notice? So a resistance somewhere around here. Resistance is here. And what did we notice? Hit that place. When price hit that resistance, what did we see? It started coming down. So we would have entered our trade somewhere around here. We would have entered somewhere around here, or maybe somewhere around here, depending on what our confirmation is. And then where will be our profit? We would have gotten out. Sorry, what will be our stop loss? Our stop loss would be above. Will be somewhere around here, just to protect us. And then we can trade it down to our next level and take profit here. So that's how you trade support and resistance. You let it come in. That's one way of looking at it. Come in. Once it bounces off here, you can buy. As it's coming up, you buy. Like now, I can decide, okay, you see what happened? It came down here. It touched there and then bounced. I can now buy. I can decide to buy. Why? Because it has bounced off this place. It has bounced off this place. So I may see that based on my analysis that this price is going to keep going up. So I just buy somewhere around here to take me back up. Yep. So that's one way of looking at it. The next one we want to look at is the break. The break can either be aggressive or conservative. If price breaks that zone, remember we talked about breaking. That if price breaks a zone, we can either enter on conservative or we can enter on aggressive. So I give you a typical example. Let me look for a good example for us. Okay, let me see. Okay, hold on. This is a typical example. Now, one way we can trade a breakout is aggressively. Aggressive. Remember we talked about aggressive. Price broke a particular zone. We decide to trade it aggressive. Aggressive meaning this is what it means. This is price going here. This is my support. Let's assume this is my resistance. Yep. And this is price. Price just goes and breaks it. The moment price breaks it, I can decide, oh, price has broken it. What do I need to do now? I need to jump into the trade aggressively and start buying. Why? Because you can see if price is going up. So what am I supposed to be doing? I'm buying. So my entry here will be I will enter my price here. Why? Because price has broken that my support or so that my resistance line. Then I can put my stop loss maybe somewhere below, based on the analysis that I have done. Let me change this to stop loss. Stop loss. So here will be my stop loss. Here's my aggressive entry. My aggressive entry. I just jumped in because I saw a breakout. Now the trouble with this is this. I am not sure that this will keep going up, because it could do what we said earlier. It could be a fake breakout. It could be a fake breakout. A typical example of what I mean is this. Now look at this. Price is going up. Wow, fantastic. The green candles are really, really going up. But what did I see? Price broke out. I've said, yes, I want to trade this because it has gotten out of the resistance. Price is now has broken out of resistance. Let me enter the trade somewhere here. Let me enter the trade because price has broken resistance. Excuse me. You see? What did I see? Immediately I entered the trade. What did happen? Price got back down. If I had my stop loss somewhere here, what happened? Price came back and hit my stop loss. I have lost that trade because I entered aggressively. So sometimes I may be lucky. I may be lucky to enter aggressively and win it. Like for instance, I give a typical example. Like look at this. This was a key support and resistance. How do I know it's a key support and resistance level? You look at it, touched there. If I go back, you see price is touching there. So price has some reaction. It touched there and bounced. It broke it. So now I know that this is a key level. What happened? Price broke out of this support line. This resistance line. I entered the trade on a buy. I said, okay, I will enter it and I'll put my stop loss here. What happened? It was a winning trade because as you can see, it went up. It went up to my next level that I identified. Yep. It went up to a next level that I identified so I can take my profits. Maybe if I entered this would have been how much? From here, this would have been 100 and about 210 pips. Which is maybe if you use the standard loss, that's 2,100. If you use a mini lot, that's 210. If you use a micro lot, that's $21. Yep. So now that's a typical example of when it breaks out and it is a good trade. It doesn't fall back like we saw earlier. Now another example of entry is conservative. This is the one you have to wait. You don't just jump in. You have patience, even though it has broken out of a zone. Now, what did you see? A typical example. Okay, let me show you. Let me show you in terms of reference. Price goes up, and then what does it do? It comes back and retests. So it was initially resistance. So resistance became support because the same price came back and tested. This is called tested. It came back and tested that resistant line that was initially resistant and became what? Support. It was resistance because going up, maybe in the past it was touching and coming down, touching and coming, but this time around it just broke it. So once it broke, price always comes back to test resistance once it breaks. If it breaks a particular resistance, it will come back and become support and test it to become support. If it breaks support, it will come back to become, if it broke it, maybe this was support and it broke it to the downside, we expect it to come back and test it again to become resistance. So resistance is up, support is down. So, but that's not, we're trying for this one. We're trying to trade this one. Let's assume I wanted to trade this. So if this was my, and I want to be, conservative, what would tend to happen is that I would wait for price to break out and come back and retest. When price comes back and retest, then I can take my position. I can now decide to sell because I'm working on rules now. I'm working on rules. I'm not just jumping into the market. I'm waiting for it to finish forming, for it to retest. Let me delete this. I don't need that extra entry. Then I can put my stop loss somewhere around here. The reason why I'm putting my stop loss somewhere around there again is because I don't want to lose all my money, because it may come back and take me out if this fails. So you see what happened? A typical example is that, look at this. Price broke out of this support line, resistance line. Yep, resistance, because you had that reaction there, and you had reaction here. It had reaction. It broke out of it. It went there before, but couldn't break out and fell, and then tried again, broke out of it, and then what did you see? It came back and retested. When it came back and retested, what did it do? It bounced. Can you not see it? So if I was to trade this, I enter this. I enter my trade at this point. Where is it? Yeah, that's it. This would be my entry. That's a blue. Blues will not go with blue. Let me delete one of it. So that would be my entry, and this would be my stop loss, because that's the lowest point price got to. You know, this candle here will be my entry. This one that I'm seeing, because that's where price began to move. It's just because it's not showing well. That's why I put it here. But okay, don't worry. I'll keep it here. So if I entered here and price decides to go up, favor me, it goes my way. Look at how much I am going to be making, because this is the final place it got to, 516. So if I had a standard loss, that's 5,106 and $60. Yep. Or if I have a mini, that's $516. If I have a micro, that's $51.60. Just because I waited and allowed it to come back and test it and then drop. So that's how you trade support and resistance. You can trade it on a bounce. Once it comes in and bounce like this coming in now, bounces off here on the support, you can sell. You can trade it as a if it bounces off a resistance, you can it's going up. It's going up. If it bounces off a resistance, you can sell. If it bounces off a support, sorry, you can buy, because if it bounces off, we think it's going up. Now it bounces off here, goes up and bounces off a resistance, we think it's coming down. It goes up and bounces off a resistance, we say it's coming down. The same thing. It bounces off a resistance, we say it's coming down. The resistance is coming down. Resistance is coming down. But if it bounces off a support, we say it's going up. It's coming down then, but bounce off a support, it went up. Same thing. Bounces off a support. Let me look for more supports. Yep, this one is support. And then what did it do? It goes up. So another example is to trade breaks, when price breaks support and resistance. So what does it do? If it breaks a particular support, we can either enter aggressively by just jumping in on this candle and then riding it to the top, or we can wait for it to come back and retest. Like now, look at what happened here. This came back and retested, but then retested here and just moved a bit. Let me see if we entered here. How many pips would we have won? Still not so bad. That's like 60, almost 70 pips. That's like almost 70 pounds. If I entered with a standard, that's like almost 700 pounds. You know, because it bounced. But what did it do? It bounced off a bit and then came back down. So that's just a classic example of price going up, bouncing, and then dropping. Or your price bounces off or breaks a particular level, then that level, if it comes back to retest it, it becomes support. It was initially resistance, up, resistance, resistance. Then when it comes back, it becomes support. So that is how you trade support and resistance. You can practice this over and over again on your program. Once you go in, once you just you can launch different trade setups, launch different ones. Just see what is happening. When price is bouncing off a particular level, you can decide to open a position. Either you want to sell it or you want to buy it. You know, use your demo accounts. I don't know how many of you have opened the demo. If you haven't opened the demo yet, feel free to message me personally, or you can do something. Message on the platform and let them also help you to find brokers that may work for you. I mean the general platform where you have a lot of students there. So to find out which ones they are using that would benefit you. But the one I am using is called FinPro. FinPro. FinProFX. So you can search that and then you can register a demo account with them. But if you need help with that, just don't be afraid to call me, call my attention, and then I'll walk you through how you do that, how you open a demo account, because it is demo that you need to use to practice. Never use your real money to practice. Use your demo to practice. So if you have any question, drop it on the platform and I would be glad to answer it. Thank you very much, everyone, and do have a good day.